This is episode 1176.
And you want to be able to say, let's go, let's double down. But I always want to be able to ask the question, what if this doesn't go the way that we're not excited about? And people here joke with me, and this has happened to me in my whole career, and I learned this at Amazon, but I ask a lot about questions like, if this metric goes up or down, are we happy or are we sad? And you'd be surprised at how many times people would say, I don't know. And if the answer is I don't know, then that's probably not the right metric to measure, or you got to reevaluate your business, right? Because you got to be able to have a goal in mind and say, okay, if this goes up, are we happy? And you plan for success. It's like, oh, we're going to launch a new product or a new pricing and packaging structure. And one of the questions I will ask is, what if this is way more popular than we think? And if the answer is, I'm going to be sad, then something's wrong, right? Like you got to plan for success and be ready. Like, oh, these systems will break, or these are the problems we're going to run into. It's like, okay, well, let's have a little quick discussion about the guardrails on that maybe before we hit launch on this, and we can have those kind of thoughts.
There's a moment every finance leader recognizes, the point where the familiar model no longer explains the business. Growth slows, signals blur, and what once worked begins to feel incomplete. What's interesting is how some CFOs respond in that moment. Do they protect the legacy or redefine it? Our guest today has had a front row seat to both hypergrowth and reinvention. And now he's helping guide a business that millions know for one thing into something far broader and far less defined. The question is no longer just how you measure performance, but how you uncover value that's been there all along, hiding in plain sight. Our talk with CFO Blake Grayson begins after this.
They say do what you love and the money will follow. My passion for making life beautiful led to a successful design firm, booming online sales, and a TV show. It also led to chaos, endless spreadsheets, and no single source of truth. We couldn't scale, so we chose NetSuite by Oracle. Now I get immediate visibility across the business, from revenue to customers and fulfillment. Clean, simple, beautiful. NetSuite is critical to the success of my business.
Hello, CFO Blake Grayson is with us. Blake's finance career spans some of the most operationally demanding environments in tech, from helping scale AWS during its early hypergrowth years to leading marketplace and international consumer finance at Amazon. He later stepped into the CFO role at the trade desk, where he helped drive growth and profitability as the company scaled. Today at Docusign, Blake is helping guide the company's shift beyond e-signature into the realm of intelligent agreement management, or IAM, as the Docusign folk like to say. Blake, welcome.
Thank you so much for having me.
So, Blake, we've been looking forward to this, and I always begin with this question. I just say, hey, take a look back for us. I leave it to the finance leader to decide what's worth sharing. But when you think about what prepared you for this role, for finance leadership, what are those things that come to mind?
Yeah, I was fortunate enough to spend the bulk of my career at Amazon in Seattle. I joined there kind of right during / after the financial crisis. I worked at a consumer bank before that. And so in early 2009, I actually went to go work for Amazon, and I started in payments finance, because that was a background that I had. But what shaped my career was over about 11 years at Amazon, I served in a number of different roles. I went on from payments to work in finance in AWS, so the kind of early cloud, computing days for Amazon had already been launched, but it was probably a $200 million a year business when I joined. When I left, a couple of years later, I transferred to another role. It was a few $1 billion. Now it's much, much larger than that as it's continued to scale. But I got different experiences, whether it was in the consumables group, for North America, like you said, in the marketplace, everything sold by a third-party seller, and then in international. So I would say what prepared me for the CFO jobs that I've had at the trade desk and now at Docusign those formative years at Amazon really, really shaped me. And I learned quite a bit from them.
When you look back, and I know this is hard, and I don't mean to put you on the spot, but was there a decision at Amazon that, as you look back, wow, we had to make that? That was real big question mark among many of our heads. Was there a decision that tested your judgment most?
Yeah, I would say in AWS was a big one. We were just really getting started in ramping that business. We went through, I'll always remember this, and now these numbers pale in comparison to the numbers you hear about today. But, when I was in that business, we went to Jeff Bezos and we were essentially asking, and at the time, Andy Jassy, who's now the CEO of Amazon, was the leader of AWS back then. And we went, and there was maybe a group of 7 or 10 of us, and we went and we were essentially asking for $1 billion of investment for data center CapEx, essentially building these data centers to fill with servers, because we thought this concept of selling cloud computing to outside customers would really could scale. And it was very capital intensive. I mean, nowadays you hear about numbers like 50 billion, 100 billion, all this kind of stuff getting thrown around pretty fast. But at the time, that was a very significant ask. And the way we got comfortable with it in finance, and this is working with Jeff, was thinking about something as basic as unit economics. In the retail business at Amazon, people can obviously get their head around that, which is, if I sell a spoon, over through the internet, I have to figure out, okay, I have to receive that spoon, I got to buy it, I got to pick, I got to pack it, I got to ship it, all the costs associated with it. And so you can do unit economics that way. And we didn't really know exactly how to think about it from a cloud computing perspective, but we essentially went to unit economics and we said, okay, let's do the financial return on one server. So if you stick one server and you say, okay, how many customers can we fill into that server? At what price? And what does it cost us to run that server, whether it's like the capital for the data center or networking, electricity, and all that kind of stuff? What's that return? And we convinced ourselves there was a really high potential return, but it came with an upfront capital cost. And so I would say that was a really key decision for us, and it proved to be the right one. I think Amazon being first in that space was a huge reason why Amazon had that lead for so long, and still is, I think, the largest, kind of cloud provider out there. And that's something that still sits with me. And that was in my early days in AWS, where finance kind of helped play a role there.
Within Amazon, you were a finance guy. You were always recognized as that. There wasn't a blurring of the lines for you at any time, or was there?
No, I at Amazon, I always was served in a finance capacity. Now I served in a bunch of different roles, so I did move around quite a bit. There are people, though, and this is true at other large companies, where people from finance might want to move into a business role, right, and take on ownership for a P&L or whatnot. The one benefit at Amazon was that there was a real value around having a strong finance partner, and that I would say you were in the room for 95% of the conversations of real significance, as it affected things. And it was, we got into the details. We had to own our business just like our business partner did, but we were really almost like divisional CFOs of sorts. And so that was just super fun to be a part of.
So I guess what I was also thinking about there was, when it came time to leave, there was little question you were looking at CFO roles.
Oh, yeah, absolutely. Yeah. I would say one of the nice things about Amazon, especially at the growth, kind of scale that we were at the time, a lot of companies would reach out to me or my peers and be curious about, hey, what are you thinking about? And so, though there were always, 99% of those kind of like roles and whatnot were always finance related.
Why Trade Desk? I'm sure you had, there was a menu of opportunities, perhaps. What made the Trade Desk opportunity attractive for you?
Yeah. When I first got the call about the Trade Desk, honestly, I had never heard of the company. It's not a company that as consumers you would know about, because they mostly work behind the scenes with brands and advertisers to be able to kind of put their ads out, through the open internet. It was a public company, though, so I was able to do my own due diligence, be an analyst, ask questions, and it was exciting to learn. The premise, what really pushed me over was the CEO there, who ended up being my boss, Jeff Green. Yeah. he articulated a vision for me that was very compelling. And it was, he was calling, this was before COVID. I went to the trade desk in December of 2019. So right before, I got there, and then COVID happened like 3 months later. So that's a whole nother story. But his vision that he articulated to me was, do you think that everybody's going to watch television like they do today through linear cable forever? And streaming was just starting to become a thing, that people were excited about. And my answer was no, I don't think linear cable is going to be a bad idea. It's like, okay, great. So if that's premise number one, premise number two is, do you think people will just pay for 15 to 20 different subscriptions, right? For all these different, you want every channel, every service, these kinds of things. And the answer to me was no. Like, I felt like it'd be too expensive, one thing, too confusing would be another. And then if content competition was strong, it gets even more expensive over time. And so they raise the price. So they say, okay, so that's premise number two. And the third is, well, if you believe that's the case, then his position was advertising has to play a role in streaming. And, at the time, it was kind of a bold statement because there were only really a couple free services out there at the time that were really using ads on what some people refer to as connected television or CTV. And so that articulation of the vision got me excited about what secular tailwind could be applied to this business. I didn't know what the time frame was, all that kind of stuff. It just so happened that after I joined, COVID happened, and it accelerated subscription usage. If service, it didn't necessarily accelerate advertising, but that was the premise that got me excited about it. And it was a company that had gone public 3 or 4 years before I had joined. They still operated very much like a startup, but were scaling very fast. And I thought I could add some value based on the experience that I had. And it was great. I really enjoyed it. But that's kind of what brought me to the trade desk.
And again, I'm wondering, can you zero in on a particular decision for us while at the trade desk that, in some ways defined your CFO approach, your style, or?
Yeah, I think at the trade desk, for me, the one thing on the trade desk that really appealed to me was the concept of supporting the open internet, and that the trade desk doesn't own the inventory it's selling. It doesn't own the TV show that you are putting ads on. By and large, the largest content providers are what you'll hear referred to as walled gardens, meaning that they have their own content and they sell ads within their own walls. Yep. And that can be tricky for advertisers because the people within those walls may have different incentives about what ads you should put, where, when, and then also what they charge, because the inventory to them is kind of free in a way, like they've got space there. The trade desk didn't own inventory. And so for me, it was one of those, like, the big compelling messaging for me when I was there, and especially in finance, was let's make sure that narrative we continue to press, which is we don't have any incentive to push an advertiser to one show or another. It's what is the best return on investment for you at that millisecond in time to be able to bid. Because these are like, you're doing like, gosh, it might have been trillions, but billions at least of impressions that come up every second, right, for people to bid on, and you're bidding on them in real time, and it's all kind of done by machine learning and now AI, I'm sure. But I would say those components. So that, just the embracing of our differentiation, that we didn't own inventory, so we could be a partner to our customers.
Well, we're going to want to talk to you now about Docusign. But before we do, I'm just looking at across these different chapters, and perhaps including Docusign. How your definition of CFO leadership or finance leadership, the role finance plays, how it's evolved for you, how you look at it maybe differently today than you did 10 years ago?
Yeah, I think so every role and every day is a new experience, and hopefully you're learning. I think that for me, when finance, like CFOs or finance teams are working well, they're a true partner to the business. They're an enabler. They are helping allocate capital. They're helping make tough decisions. They're helping explain sometimes either technical or complicated matters in a way that people can understand. and providing guardrails for growth. I think one of the things that I learned at Amazon and I applied to the trade desk, especially when you're working in high growth companies, which is what are the guardrails we have for something if it doesn't work out the way that we hope? And can we live within those guardrails in order to let the business move faster? I think sometimes you can hear about finance teams being a blocker, right, or an obstacle because it's, no, that's expensive, or no, that's too much risk, right? And whereas instead, I want to be an office of yes, right? And you want to be able to say, let's go, let's double down. But I always want to be able to ask the question, what if this doesn't go the way that we're not excited about? And people here joke with me, and this has happened to me in my whole career, and I learned this at Amazon, but I ask a lot about questions like, if this metric goes up or down, are we happy or are we sad?
Yeah.
And you'd be surprised at how many times people would say, I don't know. And if the answer is I don't know, then that's probably not the right metric to measure, or you got to reevaluate your business, right? Because you got to be able to have a goal in mind and say, okay, if this goes up, are we happy? And you plan for success. It's like, oh, we're going to launch a new product or a new pricing and packaging structure. And one of the questions I will ask is, what if this is way more popular than we think? And if the answer is, I'm going to be sad, then something's wrong. Right? Like you got to plan for success and be ready. And like, oh, these systems will break, or these are the problems we're going to run into. It's like, okay, well, let's have a little quick discussion about the guardrails on that maybe before we hit launch on this, and we can have those kind of thoughts.
Nice overview for us and some interesting insights. We want to ask you about Docusign now, and I'll point out to the listeners, you arrived in June 2023. One would imagine you have your arms around this business 3 years later, 2.5 years later. Tell us about Docusign today. What truly sets this business apart?
Yeah, so I think there's a couple really neat things about Docusign and where we are today. We're obviously very well known as for our e-signature, kind of like we're the default e-signature business in the world. It is unique to find a company of our size where, generally speaking, most working adults in the world have interfaced with DocuSign as either a signer, like they've signed something, or they've been a customer of ours in some way. We have over 1.8 million customers around the world using us. What's exciting about that is we have this kind of legacy of trust and security and compliance that people are well aware of, but we've pivoted here in the last kind of 18 months ago to saying to ourselves, we said this to ourselves many years ago, which was, there's so much more to an agreement than just the act of the signature. Now, it's super important, right? It's super critical because the signature kind of binds two parties together, and it's very important. But what happens before that signature goes into effect? And also importantly, what happens afterwards from that? And so that was also the pitch. You had asked about why I was interested in the trade desk. I got interested in DocuSign because of that potential pivot, right? So when I met with Alan Tegeson, who's our CEO, that was the pitch to me, which is there's so much more that this company can do with an agreement beyond a signature. Think about it from your own perspective. And in my own life as a CFO, I have had leases that get auto-renewed and I didn't know about it, and then I had to deal with it. Or there's a pricing volume structure that I had that I didn't pay attention to because it was buried in an agreement that was 5-year agreement, and in year 3, I hit some threshold and nobody was tracking it. There's just so much information and value that's locked up in these agreements. And so this concept of, can we unlock that for people? And we're right now at this stage where we're beginning to do that. And that is what I'm really excited about for us. But we've got work to do, but that's kind of where the intelligent agreement management platform comes into play for us.
Your latest results showed strong cash flow and IM growth. And again, that's intelligent agreement management for those of us who don't have that words flowing through our tongue every day. What did that validate? Is that a validation of IM?
I think it's an early validation for us, for sure. I think, we, Q4 for us and, for our fiscal year, it was the first quarter we ever did over $1 billion in billings for us. First year we ever did, and you mentioned this, over $1 billion in free cash flow. IM reached over $350 million in annualized recurring revenue, and that's about 18 months after launch. And so really excited about it. And like you said, it's about 11% of our annualized recurring revenue at the end of the year. And we've already told our shareholders to expect us to be approximately 18% by the end of this next year. And so I would say it's a validation of the early stages of where we are in this cycle. I think that this is going to be a continual evolution for us. Most of our traction to date, I would say, has been in more commercial, kind of smaller customers. Now we're making some traction actually already in enterprise. We've shared a few of those kind of big wins on investor calls publicly, to date. But it's exciting, but again, we're in the early innings for this, but it is something that our customers, I think, are recognizing that they can depend on Docusign to be able to hold their agreements, to trust us. We have no incentive, again, to do anything with them. Like, we don't compete with our customers in any of their businesses. And so if we already hold many of their agreements already as well, because through a signature motion. So I think that it creates a flywheel opportunity for us to be able to help our customers, and then obviously helps DocuSign as well. But it's the early days have been exciting.
Yeah. So what still needs to prove out here? Is it large enterprises? What exactly needs to be proved out here?
Yeah, I think for us, obviously moving upscale to larger companies is definitely on our radar. And, as an example, we signed Aon, which is one of the largest kind of global service providers, like brokers in the world, up with IAM. And we talked about that on our earnings call. More and more enterprises essentially understanding and embracing beyond the signature. I mean, we already have relationships with over 95% of the Fortune 500 with DocuSign through e-signature today. And so having additional conversations with them about, let me tell you about all the features and functionality and, the added components. Because as an enterprise, there's different requirements that you have. You can imagine the agreements that a company has, you can argue, are probably some of the most confidential and important data that you have. Having your entire company have access to those agreements is probably something you want to avoid. There's certain things like, I want to restrict it to certain roles, certain groups, just like for finance, I don't want people to have the financials necessarily access to unless they need to in order to do their job, right? And so there's all these features that we're building for enterprises. And so as we do better with that, it gets more exciting for them. I think that it's just continue to have those conversations with our customers when their contracts come up for renewal, because that's one of the exciting things that we have an advantage of at DocuSign, is that the majority of our IAM customers were existing customers of ours beforehand. Right. And that we're able to have these renewal discussions with them and say, hey, let me introduce you to this new platform we have. It has e-signature in it. IAM comes with e-signature, but on top, there's all these extra features that we think you might find interesting. You should start experimenting and using these and adopting these. And we're finding that that's improving over time. But that's kind of where we are today. But it's still early. We just finished the first 18 months. It's our fastest product, growth in history. But that said, we've still got a long way to go.
So again, your tenure here coming up on 3 years. You've learned quite a bit. You know a lot that you didn't know 3 years ago. What are the few things that actually drive results at this company? What have you learned? What are anything surprise you?
Yeah, I think the obvious, the biggest inputs for us. So the thing we focus the most on right now is trying to accelerate growth. That is the number one job for us at DocuSign. It's something that we signal to investors that we believe we can accelerate our annual recurring revenue growth, or ARR growth, this year, and we signaled that in our guidance for this year. The way we're going to do that is really three different ways. One is we're going to add new companies, right? Predominantly through IAM that we think that would like that platform, including e-signature. The second is expanding existing customers that we have, predominantly through IAM. We have that opportunity as well. And the third is improving the retention of the customers that we already have, right? Because we have a pretty large book of business. Like, we have over a $3 billion book of business. You improve your retention capabilities, which essentially is lower churn, then you're able to accelerate growth. And so those are the biggest elements that we talk about as a company. And then within that, what are the input metrics that drive those, right? So it's like, okay, what kind of intelligence can we say, like, when our reps are talking to their customers with new deals, are they referencing IAM? How well are they doing? Who are the ones that are doing great, and how do we share those best practices with other people? How often are they sharing that with customers? How far in advance from a customer's renewal are they having those discussions? So you can imagine all the metrics that come with it. But I think those are the biggest metrics. And then obviously, if customers are using the platform, it's like an early indicator. I mean, one of the things that it's been really nice to see is like the we talk about e-signature generally in terms of envelopes. So the number of envelopes sent, and our envelope kind of usage, or like the envelope sent, has been growing pretty nicely on a year-over-year basis past 6-7 quarters. And so that's nice to see too, because as customers want to use your service more, it's usually an indication that they're going to want to buy more from you in the future. It's not a guarantee, but it's a lot better than going the other way. And so those are a lot of the metrics that I think about. But I would say for us, job one right now is about accelerating growth, predominantly by sharing with customers the value that the IAM platform can provide.
When you think about those inputs that matter, when one of them moves, what happens? I mean, what changes? For better or worse, there's an input that flares up.
Yeah, so it's so we have we'll do metrics review. So I sit in a weekly review that talks about IAM, and then we'll have a scorecard, let's say, of 20 plus metrics that we believe are the most impactful, or the ones that we care the most about. And we'll have, just kind of like certain conditions that, you'll highlight them in colors based on how you think they're doing. And we will ask the questions of what this means. And, I think I referenced this earlier, but I talk a lot about internally around, does this make us happy or sad? And by this number not being at what we thought it was, right? And you debate it. And if you're not sad about something that's going down, well, then you probably have the wrong metric that you're talking about. So we have to be flexible to change metrics in and out as appropriate. I mean, it has to be judgment and logic and data that goes into that. But that's the component for us about. And then the other trick is, if every one of your input metrics is green, but your output metric, let's say that's like billings or bookings, is not doing as well as you had hoped, then you got a problem, right? Because then you better pick new input metrics, because it's not driving the output where you want. So it's, that's kind of a constant balance that you're trying to figure out, because too often I think some teams will say okay, what metric matters to you? And they'll say revenue. Okay. And well, of course revenue matters, but that's an output. That's how do you get more revenue or less revenue if you don't do your job well? And so it's let's set these input metrics to focus on them. And we're still figuring that out, right? With IAM, right? Which is, what adoption, what features, over what period of time, on a vintage cohort basis, what does it look like? And if customers engage with this feature, what does that mean for the next feature? And what did that mean for them when they came up for renewal 12 months later? And how did we do? And we're just renewing our very first set, last 5-6 months of the very first customers that we sign up for IAM. And so every month we're starting to learn more and more about, okay, this is what this looks like. And then you hopefully have conversations with your sales team about, how do you have those conversations with your customers too? Yeah. So that's how I think finance, or anybody honestly, should approach a metrics-based business.
So as you scale IAM, how do you decide where to invest, and what makes it hard?
Yeah, I think the hard part is both dollars available and capacity on your team, frankly. And so then what you have to do is kind of ruthless where how you prioritize. We just, we went through our annual, in support of our kind of annual guidance, you go through an annual planning process and you put everything on the page that you want to be able to do. And part of that for us was, okay, given a resource allocation of X, what do you think you should do and what can you do? And then we also looked at, what could you not do that you wish you could? Right. And so a lot of what we do is you look at that second bucket and say, this is great. I want to do this, kind of project or thing over here. So then what you first do is you look at the first bucket and you say, did you prioritize effectively? Right. And so you go through that whole exercise. And then what you do is then you got to be ruthless about, if there's still things that are remaining, how else within the organization will you get the productivity you need to be able to fund it? Those are hard conversations. They can be contentious conversations. But frankly, they're great conversations to have, because it shows you, one, what are the aspirations of your teams about what do they think? If somebody comes in and says, I'm doing everything I need to do, it's all perfect, you should be skeptical, right? Because it's saying well, are you really drilling down and doing what's right for the customer, right? And approving. And then if there's somebody where it's the best, shiniest objects are below the line kind of a thing, they're in the second bucket, it's, talk to me about that first bucket and tell me why those things are more important than over here. And so you have different conversations with different people depending on the situation. we went through those. And we funded, things around like there's investments we want to make, whether it's in the federal sector or things like that. And these may be, longer term things that we want to do, whether it's in security, right, for us, which is so important. And we say, okay, this is how we're going to prioritize and move it forward.
We want to touch on AI with you, Blake, and we wonder, where is AI actively used in this business today?
Yeah, it's used throughout Docusign. We still got ways to go, but on our earnings call, one of the things that we highlighted was 60% of the code that we deploy now is AI enabled, AI assisted, if you will. We use AI in our sales motions, like pre-sales, to be able to help give our reps, information about the customers they're talking to, what are the usage they have, things they should know about, that kind of stuff. We use IM in our procurement business, right? Like our procurement team, a DocuSign alone has tens of thousands of vendor contracts, right? And so how do you manage those? Where do you find the value? How do you make sure that if you have multiple contracts with a vendor, you're doing the right things? We do that. In my own finance team, we use AI to extract information from invoices, to manage POs, to help in like collections use cases to be able to respond more quickly to customers. We use it a bit in our accounting close process. So we've taken a concerted effort to uncover the areas where we can use AI. And it's kind of forced, to be honest with you, too, because we want to be able to be more productive and become not only a re-accelerator in our growth, but be a more profitable company as well. And AI is a tool for us to be able to do that, to allow us to be able to scale our business. I mean, I'll give you an example. Like, I just like a lot of people with a go-to-market team, I have a deal desk, revenue operations, if you will, team that reports up through me. I don't want to scale that business with people just because our volume goes up, right? Just because we add or sign new customers. How do we be able to manage that with the people that we have, right? And so we've been able to keep that team pretty flat, as past few years. And that is not easy, right? Coming from a situation where it used to scale with volume and people. And so now it's like, no, we have to automate, and AI is a key enabler for us to be able to do that.
Can you tell us a little bit about that relationship, the go-to-market relationship, the people, the professionals involved there, and how finance, embraced the GTM strategy?
Yeah. So it's a super important relationship. We have we call it financial plan analysis. We have an FP&A team that is dedicated solely to the go-to-market function. And so it's a team of people that I would say generally is based where the senior leaders of that business are, to provide them the best divisional finance support, if you will, like divisional CFOs, and to be able to ask questions about, where are we trending, which segments, what regions with what products, where are the gaps that we have, what can we learn from the different segments, how productive are we, and where can we get more productive? And this is a balance, right? Because there are some finance teams out there in the world that would say, well, we should just get more productive every year, and there's always opportunities to do that. But at the same time, we're in a little bit of a pivot base where we're trying to re-accelerate our growth. And I've learned in my career that managing cost, while it's hard sometimes with the decisions you have to make, it's a bit more straightforward than it is about accelerating growth. And if you have an opportunity to accelerate growth, you really want to make sure you give yourself the best chance to be able to do that, because that's not something a lot of companies, I think, can do, like re-accelerate and do it well. And so we've been balancing that, wanting to make sure we fund and support the go-to-market team, but also sitting there and saying but we should be also to get more productive at the same time. And that sales kind of FP&A function is critical, I think, to that. And I reference this a bit at Amazon, but I have a person who works for me directly that runs our sales kind of go-to-market FP&A. He is in every major meeting or decision of consequence that affects the go-to-market team. And the judgment of that leader is super critical because it helps shape what it is. And if you're good at what you do in finance, people listen. And if you can provide that judgment, I think those high judgment roles are just becoming more and more important, especially with the access and the speed with which you have access to data.
The go-to-market mindset of 3 years ago versus today, has it certainly it's scaled, but is there any fundamental change in terms of if there's a go-to-market mindset for
Yeah,
finance. But what did you brought?
yeah, it's interesting. I would say, interestingly enough, DocuSign's headcount is actually lower than it was 3.5 years ago. We came out of COVID really growing at a super rapid rate, right? Because the demand was going off the charts. But so did our teams. And then when everything kind of normalized a bit, it was high. And so we've had to make some tough choices. The thing I'm excited about is that over the last 3.5 years, while our headcount's down, I think about 13%, our revenue, like if you look at our quarterly revenue, it's up like 35%, 3.5 years ago to this last quarter that we just delivered. Now I would say the motion has developed over time. The biggest change is this IAM concept, right? We are not just selling envelopes anymore to customers. Now, envelopes are super important, and it's a key moat, I think, for DocuSign. It's what customers really obviously know us about, and what signers obviously know us about that. Sorry. And but now, how do you have the conversations with especially larger customers around an intelligent repository for your agreements, workflow management, and like, how do you sync up workflow? So if you're an investment advisor, you want to open new accounts. How do we link up with your Salesforce kind of information already, so that these forms are pre-populated? And when you want to sign up the new account, if you need to have a live ID detection, we have a third party ready to go for you on that. So we can convert and close those kind of workflow processes, 80, 90, we have examples that's 80 or 90% faster than it was previously with pieces of paper and, the FedEx of the old days and all that kind of stuff. And so, our go-to-market kind of execution has evolved, and we brought in, Paula Hansen joined us, a couple years ago now. And, she's fantastic, and it's been great to work with about how do you evolve that solution sales cycle a little bit differently from an envelope only sales cycle.
We're trying to understand how AI might be improving the signals finance leaders use to run the business. Wondering if there's maybe, what do you trust more now than maybe you did 3 years ago when it came to AI and how it's helping you see signals?
I think the amazing things with AI, at least to date, are things that I would say, obviously manual tasks that you have to go through. You can imagine with 1.8 million customers and hundreds of thousands of commercial customers, something like collections can be hard, right? For that, I don't have a very large collections team, to be frank. And so to be able to get that data and to be able to figure out, here are the questions that customers have, and are they late in a payment? And we have our collections efficiency, and you see this in our working capital, like our free cash flow improvements, has gone up dramatically over the past few years. Now, I would say AI has been a part of it. Automation has also been a part of it. That's not necessarily AI related, but automation is automation, however you think about it. And so I've gotten much more comfortable with how we manage that. I think on the forecasting side, we've got that opportunity. We're starting to do that a little bit more here about how do we think about that and what are the right long-term forecast modeling projections for us to that. As you can imagine, right now in the environment we're in, long-term forecasting is super hard because it's all pretty cloudy, right? Like I feel sometimes like we're in the middle of an F1 race and there's smoke ahead, right? Everybody's got these great cars, and it's like, so how do you navigate, through that? And so asking questions, doing scenario analysis and things like that works for us. I think it is absolutely a vehicle for us to be more productive and to help our own customers. And so we can both become more efficient as a company, but most importantly, help our customers be more efficient with theirs. Because, this is pretty simple, but when people ask me about DocuSign, how does DocuSign do better? We do better if our customers do better, because if their business is growing, they use us more and we become more valuable to them. So anything we can do to help them do that is super valuable for us.
Well, Blake, we are up to what we like to refer to as our finance strategic moment. And again, This might have happened anytime during your career. We're looking for a moment of insight that you experienced along the way. What would you like to share with us?
Sure. I think this might resonate with your community, but I have learned this earlier in my career, but I applied it at Docusign. So when I joined Docusign, Docusign had been coming out of a kind of a tough situation that COVID came out, had a boom, and then they kind of shrank down after it, or just decelerated, quite a bit after it. We were in a situation where we needed to make some hard choices around efficiency. And so the element for me was, I think after, 60, 90 days of being here, I had an opinion and talked to Alan, the CEO, about this and said, we needed to become more efficient, right? And the company had made some really hard choices up to that point already. And so unfortunately, we both felt that some work still needed to be done. And so I would say the old adage, the adage I use is, in crunch times, making the hard decision faster is way better than waiting. Yeah. And so we made some hard choices. And then what that allowed us to do was to kind of clear the deck and then stabilize the business, which we then did, and then set us up for a re-acceleration of growth, which we haven't yet delivered, but we're on the cusp of being able to do that. And so I think for me, the strategic finance moment was seeing the efficiency improvements that we needed to make, being very clear about it with data, leading with data, super important, agreeing on that, and then rallying around that in order to make the hard decisions, and trying to have empathy for the folks that you impact with those decisions, but it's the right thing to do, unfortunately, for the company. But trying to do that swiftly if you can, and be able to move forward, because it's just super important, both for culture, morale, but also for your customers. And so I would say doing that and being able to pivot to this potential of the IAM platform was something I think that was a strategic moment where we needed to make a hard choice and we needed to move quickly, in my opinion, and we did.
Wow. Thank you for that. We're going to jump to what we like to refer to as the mentoring round. We're going to ask you to look back again, Blake. We want you to think about that first 60 to 90 days when you stepped into the CFO role at the trade desk. It was your first CFO true tour of duty. You're stepping off the Amazon wide body, really, into an entirely different culture. What did you think of the role? There must have been something, as much as you knew about finance leadership, as much as you thought you knew about the CFO role, there had to have been something you wish someone had told you. What would that have been?
I think that for something somebody wished we would tell me, I knew this was going to be, but I maybe wasn't just experienced enough for it. So at Amazon, I was kind of like in an FP&A role, to be honest, because we had centralized roles for accounting, centralized treasury, centralized tax, centralized investor relations. I dealt with those groups, but they didn't work for me, and they worked kind of directly up to the CFO of the company. So for me, I knew like the accounting function would be like, that's the big one, was going to be new for me. I wish somebody would have said, you're probably going to spend, 20 of your first 30 days with your controller, right? Or chief accounting officer or whatever you have, because that for me is super critical. And so that's what I did. I always knew it was going to happen, but maybe not as deeply as I would need to, about understanding like, okay, here's GAAP accounting. Here are the issues. What are the controversies? Like, what are the hard parts of this job that you run into? Tell me about the past, all those things. And so, I would say I warned, like right when I got in, I warned the head controller that we had at the trade desk who worked for me. And I said, you're going to think I'm a micromanager here, like big time, because I frankly am not a CPA, and you're going to have to educate me on these things. And I appreciate the judgment that you bring, but you're going to have to walk me through it. And so I spent a ton of time with that. I spent a ton of time on tax, a ton of time in investor relations, because I didn't do investor relations at Amazon. And so I had to learn those things. And I would say that's the biggest change for anybody, I think, moving from a large company kind of divisional finance position to being the CFO of a company, is because all those centralized functions now report to you. And you better become, I don't necessarily an expert, but you better become knowledgeable of all of them as quickly as you can. And then my other kind of advice to people is learn the business. Like, go talk to peers about what it is that they do, and ask questions like, what's the biggest controversy that you run into? What's the hardest thing you struggle with? What does finance do that you love? And what does finance do that bothers you? And you just have to soak that all in and not walk in with preconceived notions about what is the right way to do things, right? Because especially when you come from a big company, you might think, oh, well, I know how to do these things. I would say, well, I've actually seen a lot. That doesn't mean I know how it's necessary should work here, but I probably can have some value to add when I learn enough. And so I did that at the trade desk, and I did that again at Docusign. I followed the same playbook, which is spent a lot of time with the chief accounting officer. I never worked in a software as a subscription business, right? So I sat down, but that was one of the interesting things for me to take the job, was like, I want to learn. I'm just like naturally curious. And so walk me through all these things, talking about these things. And then the point about the controversy is, I would say also to people, take that with you wherever you go, which is even here at Docusign, and maybe to a fault, I'll ask people to get to the controversy of the discussion as fast as they can, because that's where you should spend the bulk of your time. Like, if everything's going swimmingly great in your business, I don't need to hear about it for 20 minutes. Like, you could spend 2 minutes and tell me about it, but let's get to the part that keeps you up at night, the part that you and the team disagree on, the part that you struggle with where you need help. Like, let's have those conversations, because that's, I hope, the point of what a leader is there for, is to actually have those. And we're doing a better job, I think, at Docusign doing that.
Oh, wonderful. Thank you for that. We like to ask our guests to reflect a little on the personal side. Blake, we wonder if there's something from your past, perhaps, that a lot of people don't know about you, whether it was an interest you had, a pursuit, something you do in your spare time even. You've been there 3 years, so maybe your colleagues know a great deal about you, or maybe not. I don't know.
They probably don't know this. I would say one of the really important phases of my life was in high school. I rode horses, and I went to a school that required you to take care of a horse, and you rode Western style, and you cleaned out the stall every morning, and you fed it, and you rode it, and it was your responsibility, and you take care of it. It was something that taught me grit and perseverance, and taught me that you can do hard things, right? Like when a horse is causing problems or something like that. I haven't ridden in a couple of years, but it was something that at first I did not like, to be honest with you. And then I came to really enjoy it. And so it's something that I don't think a lot of people probably would know about me.
So can I ask, I mean, you were in high school and it's determined that here's where you're headed. Your idea, or are you being...
You know, it's funny. I would say it was my idea, but only because my mother gave me limited choices about what high school I could go to. And let's just say the one I wanted to go to wasn't up to her standards or whatever. And so, you know, I had, my brother went to that school too. And so it was something, that was intriguing to me, but it is something that it bonds you, right? Not only to the horse, but to the people that you're with, in my opinion. And it does teach you at a young age to work hard at something. You know, like I was fortunate that I was able to live in a great home, and, you know, I was able to have an education, and I know there's a lot of people who don't have that, you know, and for me, that experience taught me grit, and I think it is important for people nowadays, or always, you don't appreciate the good times until you go through some struggles, to be honest. And a lot of us would say, I don't need to go through that struggle again, you know, that you had. But I bet most people would say, I learned something from it. And so that's the way at least I think about it.
Yeah, nice. Thank you for that. What about a book or a resource for us? Is there anything that you think's influenced your thinking along the way, something, or maybe something you've escaped with over time? Don't know.
Gosh, you know, I am a reader. I would say, a book I really liked that got recommended to me actually by somebody I work with was The Outsiders, but not the book, you know, the S.E. Hinton book, but the, I think that was who the author was of that first one, but by William Thorndike. And it's essentially like 6 or 7 CEOs that are a bit extraordinary in kind of the returns they generated for investors. And it was really about taking the long-term view, doing really well with capital allocation, and having the right long-term mindset, and being okay being misunderstood in the short term. I thought it was a great book. It's one I would recommend to a lot of people to read. I also read, and this may be strange, but I read a lot of books around like the financial crises. You know, I would say like Too Big to Fail by Andrew Ross Sorkin's a great book. I read those because it's always, I think, a good reminder to be humble and to have humility about when you think everything is fantastic and growing great is when sometimes things go badly. And so it's just a good reminder to always be looking around corners as a finance person. And it's something I learned that at Amazon quite a bit, which is what is the implication of this decision coming down the road? And do we need to get in front of it and have discussions? Because it's no fun making decisions at the 11th hour, right? But when you have time to be able to consider potential ramifications, you can be a lot more thoughtful about it. And so Financial Crises, Too Big to Fail is a great book.
Well, thank you for that. We're up to our final question.
Sure.
We want you to look forward finally for us, Blake. What we're interested in are your priorities for the coming 12 months. What would those be?
Simply put, it is to accelerate the growth of the company, particularly by growing the intelligent agreement management platform for Docusign. It is about showing customers all the unlocked value inherently in their agreements, how Docusign can actually help them unlock that value and not a lot of additional cost, and provide them the ability to scale and help their customers. And that's what that is what 95% of the discussions in this business today are about.
Blake Grayson, thank you for joining us on CFO Thought Leader.
Great. Thanks for having me.